According to MIPA, a tax audit is the examination of a taxpayer's business records and financial affairs to ensure that the correct amount of income is declared and the appropriate amount of tax is computed and paid in accordance with tax rules and regulation. A taxpayer can be selected for an audit at any time. Next is type of audit. There are two types of audit, which are desk audit and field audit. Desk audit is conducted at the IRBM's office. Any issues or adjustment of income and tax difficulties can be resolved by correspondence. If additional information is required, the taxpayer may be asked to attend an interview at the IRBM's office. Generally, this process entails reviewing and analyzing all income and expenditure information of the business, as well as the claims submitted by the taxpayers in the ITRF. In certain circumstances, a desk audit case may be referred for a field audit action through a field audit notification letter. Next is field audit. Field audit it's either carried out at the taxpayer premises or IRBM's office or any places that they have agreed upon. It involves by reviewing the taxpayer's business records. For sole proprietorship or partnership, if records are incomplete, it may involve their non-business records such as personal bank statement. The taxpayer will be given 14 days notice prior to a field audit. The main objective of tax audit is to encourage voluntary compliance with the tax laws and regulations and to ensure that a compliance rate is achieved under the self-assessment system. As such, the audit officer is required to ascertain that the correct amount of income has been reported and the tax has been paid in compliance with the tax laws and regulations. A tax audit activity is an approach by the IRBM to educate as well as to create awareness or to provide exposure to the taxpayer on his rights and responsibilities under the provisions of ITA.
Let's begin with the audit venue. According to the Tax Audit Framework 2022, audit visits are only carried out for comprehensive audits, not for desk audits. The audit may be conducted at three main locations: the taxpayer's business premises, the IRB office, or any other place mutually agreed between the taxpayer and the audit officer. Field audits, which are done at the taxpayer's premises, allow auditors to gain a better understanding of the business operations and environment. During the visit, the auditor must introduce themselves and clearly explain the purpose of the audit. Now, let's talk about how the audit starts. The commencement of audit. Before any audit visit takes place, the IRBM will issue a notice of audit visit at least 14 calendar days in advance. This notice serves as formal communication and includes the audit date, the years of assessment involved, the name of the audit officer, and the list of documents that the taxpayer needs to prepare. If the taxpayer has a valid and unavoidable reason, they may request to postpone the audit. However, the audit process can still proceed if the taxpayer fails to respond. During the audit visit, several important steps will take place. First, there will be an opening meeting. The auditor will introduce themselves, explain the audit scope, and inform the taxpayer about their rights and responsibilities. Next is the interview session with the business owner or representative. The purpose is to understand how the business operates, what systems are used, and how financial records are maintained. Then the auditor may do a walkthrough of the premises to observe physical stock, processes, and equipment. If needed, the auditor will also access accounting software or point-of-sale systems to review records. The audit usually takes 1 to 3 days, but this depends on the size and complexity of the business, as well as how cooperative the taxpayer is. Finally, we come to the most crucial part, the examination of record. In this stage, the audit officer will thoroughly review the taxpayer's documents such as financial statements, ledgers and journals, bank statements, invoices and receipts, and stock of asset records. For sole proprietorships or partnerships, if business records are incomplete, the auditor may examine personal financial records such as private bank accounts or household expenses to determine actual income. Under Section 80 of the Income Tax Act, the auditor is given full legal power to access business premises and to inspect, copy, or extract relevant documents. If the records are stored electronically, the auditor may download data from computers or servers for further analysis. This process ensures that all income is correctly reported and tax is accurately calculated.
Now let's begin with the audit time frame. The on-site examination of records during a tax audit usually takes about 1 to 3 days. However, this can be extended depending on the size of the business and the complexity of its transactions, the form in which the records are kept, and the level of cooperation provided by the taxpayer. Now, this time frame only applies to failed audits. Next, we move on to the settlements of audit. After completing the audit work, the audit officer will prepare an audit findings report, which needs to be approved by the branch audit manager. In some cases, the taxpayer may be required to attend a meeting at the IRBM's office in order to discuss proposed tax adjustments, which will involve the audit officer and at least one senior audit officer. Even if not officially called, the taxpayer may voluntarily attend to seek clarification or submit additional documents that will help resolve the case faster. The taxpayer will be informed of the audit findings, which generally cover 3 main areas: the audit issues raised, the reasons for raising those issues, and the amount of proposed tax adjustments. If there are proposed tax adjustments, a written notification will be issued. From the date of this notification, the taxpayer has 18 days to file an official objection. They must provide supporting documents or evidence to back their claim should they disagree with the findings. If no objection is made, or if the objection is found to have no valid basis, the taxpayer is considered to have accepted the proposed adjustments. Once everything is reviewed, the IRBM will issue one of the following: a notice of additional assessment, including any applicable penalties under the Income Tax Act, or a notification of non-suitability to tax, or a letter confirming that the audit is complete and no adjustments are necessary. Now, the time frame for settling a tax audit should be within 19 days from when the audit begins. If the audit cannot be completed within 3 months, the IRBM will notify the taxpayer about the delay and provide updates on the audit's progress. Once settled, the same issues for the same year will not be re-audited unless new information arises.
Let's look at the selection criteria. There are 6 selection criteria used by the Inland Revenue Board in selecting companies for tax audit. The first one is location. Companies in major cities like Kuala Lumpur, Penang, Johor Bahru and Melaka are more likely to be selected due to the high concentration of listed companies and active economic activities. The IRB focused on these areas to ensure compliance and effective tax collection. Next is specific industry. Sectors like property development, construction, medical services, transportation, plantation and telecommunication are often chosen due to their high evolving nature and higher tax risks. These industries also tend to have complex or unresolved tax issues, making them a focus for the IRB. Another selection criteria is contentious tax development. These are hotly debated issues such as transfer pricing, withholding tax, interest restriction, reimbursement allowance, and rental income under Section 4A. This often involves subjective interpretation, leading to potential disputes. As a result, the RIB prioritizes such cases for audit. Another key audit selection factor is third-party information. If IRB suspects Underreported income based on data from related parties, such as mismatch between claimed expenses and reported income, it may trigger an audit. This helps IRB detect inconsistencies and ensure accurate tax reporting. The IRB also uses risk analysis to select audit targets. By comparing a company's financial data to industry average using advanced IT systems, significant conflict can be identified. These gaps may signal non-compliance, making such companies high risk and more likely to be audited. The last selection criteria is a taxpayer's previous record of return. Frequent late submission or failure to file may signal non-compliance or reporting issues. Therefore, taxpayers with poor filing records are more likely to be audited. Now, let's look at the rights and responsibilities for audit officers. They must be professional, honest, and act with integrity. Audit officers need to clearly explain the purpose of the audit and the taxpayer's right. They must be fair and knowledgeable in carrying out their duties. Audit officers must not have any personal or financial interest in the case. They also should not suggest specific tax agents to the taxpayer, and they must never misuse their authority as stated in Section 118 of the Income Tax Act. This ensures the audit is fair and transparent. Let's now look at the taxpayer's role during a tax audit. Taxpayer must be honest, cooperative, and provide reasonable assistance to the audit officers. They should answer audit questions fully and truthfully. At the same time, taxpayer must not offer gifts, do business with the officer, or make direct payments because all payments must go through official channels. They also must not construct the officer in doing their job. By following these rules, helps ensure the audit runs fairly and smoothly.
Hi, let's proceed with my session. I am Farah. I'll be explaining about tax agent, what tax agent should do and not do, and those offenses and penalties regarding tax audit. First, let's talk about tax agent. Who is tax agent? Tax agent is a person that holds approval as professional accountant or any that have been approved by Minister of Finance. If the person, which taxpayer, fails to submit approval of the agent, then IRBM or Inland Revenue Board of Malaysia has right to reject the appointment. Being a tax agent holds a responsibility to the public that they need to give the best of the best to the client and also must follow the code of ethics that have been applied by IRBM. Next, let's see what tax agent should do while holding the position. Tax agent must be honest, professional, and knowledgeable about all related of laws. Their work must align with clients and IRBM from the start following the right process until the end of the agreement. They also need to give accurate and frequent update about every issue whether it's good or bad. Tax agents must keep all information confidential and ensure it is away from any strangers. They also harshly prohibit from misuse the information gained and also the position for any personal gain. Those are what tax agents need to obey throughout the agreement with the clients. After that, tax agents is not suggest or recommend to do any of this because it will breach the contract between the clients and tax agents and might be more worse than that. First, tax agents cannot give wrong advice or try to help their clients from paying tax at the right amount. They also cannot delay any process or be irresponsible of their duties like took longer time than scheduled. And they are prohibited from giving any gift to tax officers even though it is on behalf of their clients. As a tax agent, we are tied with rules and regulations that need to be followed. If one could not follow any of these, then you might want to find a different position. I think I've already submitted everything. So let's see. Wait, what? What does this mean? I've already did everything. Well, seems like someone is in danger. Let me explain about offenses and penalties. First is understatement of tax, which tax paid by taxpayer is lower than tax need to be paid. This will be imposed under subsection 113 sub 2 of Income Tax Act. First, the taxpayer must pay equal amount to IRBM as a penalty which charged at 100% and charged accordingly at 50% for first offense, 30% at second, and 45% at third and subsequent offenses. Second is failure to submit tax return within the time given by IRBM. This will be charged under Disobey Section 77 and 112 Sub 1. The offender or the taxpayer will be liable to, first, a fine of 200 ringgit to 20,000 ringgit or imprisonment up to 6 months or both, and a late filing penalty which will be charged 35% of tax payable based on how late the tax filing is. Next is failure to keep records that relevant to the audits or tax payment. This result to cancel out Section 82 and liable to a fine between 300 ringgit to 10,000 ringgit or imprisonment for 1 year or both of them. Voluntary disclose program is when the tax agents help taxpayer to not pay the amount that need to be paid, or when the taxpayer acts on their own to disclose the wrong amount. They are liable for penalty as low as 0%, depends on timing and period, whether it is before or after audits have been done. And they will be encouraged by the IRBM to pay the other stated amount. The last penalty and offense is providing false or misleading information by the tax agent. This is when they do what they shouldn't do, just like how I mentioned earlier. So, this is offense under Section 113 Sub 1 Sub A of Income Tax Act. The person is liable to a fine of 1,000 ringgit to 10,000 ringgit, and special penalty where the amount of tax undercharge will be double, which means that payer need to pay 200% of the normal amount. Those are all the penalties and offenses for tax auditing. This strongly need to be avoided to ensure smooth processes. As a government bodies, we have to follow rules no matter what. And that's all for our presentation regarding tax audit. I hope you understand our explanation and I see you when I see you. Bye bye!